It's Tuesday, February 28th, 2023. I'm going to start by saying this. There are a lot of people out there that are going to get exactly what they deserve. There is so much stupidity out there, so many delusional people, so many careless and irresponsible people. This next depression is going to shake out a lot of these people. And I was reading some articles today, and I want to share some of this with you, and just the danger people are putting themselves in. The desperation and despair that we're going to see in this country is going to be unlike anything you and I have ever seen. Probably unlike anything your grandparents, great-grandparents have ever seen. This is going to be historic. It's going to be epic. It's going to be biblical. This article I was reading today from the economiccollapse.com, a 1998 Ford Escort for $289 a month for 84 months. Inflation is completely destroying our standard of living. I mean, we are watching the blood being sucked out of people right now, especially poor and middle class, and it's given to the rich. The bottom of the economic food chain is being hit extremely hard right now. And again, it's the poor and the middle class that are really going to pay the price here. The article went on to say, look at Costco now selling roast beef sandwiches for $9.99. A survey, 78% of this survey in this article say the economy is in poor condition. So, you know, when would you ever think that Costco would be selling $10 sandwiches? When did you ever think that you would see people paying $289 a month, nearly $300 a month for a 1998 Ford Escort for 84 months? And more than likely that car will get repoed. More than likely that person will miss payments, lose a job, miss payments, and their Ford Escort from 1998 will be repoed. Another article today, U.S. home prices tumbled for 6 straight months in December. You know, I don't care if you're a real estate agent. I don't care if you're a lender. Home prices are going to continue to go down. Mortgage rates are going to continue to go up. We're going to see the squeeze, a shrinking of qualified buyers now who can come into this housing market. You know, I've been talking to real estate agents. I've been talking to lenders. These people don't have a clue what is happening. They don't have a clue what is about to happen. Do not take financial advice from a mortgage lender or a real estate agent, or you will probably be bankrupt. I was watching a podcast today, one of my favorite podcasts, Valuetainment. Patrick Bet-David is the host of Valuetainment. The guy's worth a few $100 million, maybe a little bit more. Very successful guy. Has a lot of great guests on. I think he's dead on with a lot of his forecasts regarding the housing market. But they showed a Wall Street Journal video on that podcast today of a car lot that is now beginning to fill up with new cars. And they went back last year when the car lot, this specific car lot was empty, not one car in the car lot. Now about 150, 175 new vehicles on this car lot. And on the podcast, Peter and his cast, they were going over some of the numbers. Average new vehicle transaction, the price of a new vehicle transaction, the price of that 3 years ago was $32,000. The price today of a new vehicle transaction, $47,000. Now, they went back to 3 years ago when that price was $32,000. They did the math. At 3% with zero down in California, your payment would be $575. Now today in California, if you bought that same car at $47,000 with the interest rate that has gone up at 6.5% with zero down, you're paying $919. That is a 60% increase in a car payment, same car from 3 years ago versus today. Has your income gone up 60%? You look at egg prices up over 70%. Everything is going up except wages. In 2019, household income was $68,000. In 2023, it's $74,700. Income has increased 10,000, or it has increased 10%, but your car payment increased 60%. And again, you look at food, you look at utilities, your income is not keeping up, ladies and gentlemen. If you can't afford a car, how in the world are people going to afford a house? Car prices will go down. Home prices will go down. Average car loan length in 2019 was 59.5 months. So that's 5 years. Today, there's 69.7 months. That's 6 years. Prices have gone up. Interest rates have gone up. You're going to pay a lot more. I was looking at some of the real estate numbers today. Orange County, California, one of the hotbeds of real estate in the United States of America. Sales are down 43% year over year. This is the biggest drop in U.S. history, ladies and gentlemen. Orange County real estate, this is usually the hottest real estate market, typically probably the top three hottest real estate market in the country at all times. Well, prices are down 43% year over year. Inland Empire, down 45% year over year. Third biggest drop in history. So if people, and we know that car repos are screaming right now. If people cannot afford to buy a car, literally their car payments, if you buy a car from 3 years ago to today, they're nearly doubled, up 60%. And you look at now mortgage rates, a 30-year fixed rate, 7.02%, I believe today. If your FICO isn't great, you're going to be paying about 8.25%. How in the world are people going to do this with these inflated home prices? Something is going to give, ladies and gentlemen. That's why I'm completely on the same page as Patrick. We're going to see home prices go down. We're going to see car prices go down, new and used. The seller is going to have to give in here. Otherwise, they're going to be sitting on a ton of homes and a ton of cars. And here's another big problem. CNBC today, 60% of U.S. of Americans live paycheck to paycheck. Inflation is part of their everyday lives, expert says. That's today. I don't know if that's focusing. That's CNBC today, 60%. I've seen it as high as 70. But how in the world do you have a thriving, healthy car market or real estate market when you have 60 to 70% of Americans living paycheck to paycheck? When auto prices are going up 60% versus a paycheck going up 10%. Does not equate, does not add up, does not make sense. It will not work. This is unsustainable. The hedge today. Amazon employees can now borrow against their stock to buy homes. This is an article actually that came out of the Wall Street Journal, and the hedge was reporting on it. Amazon employees will soon be able to pledge company shares when purchasing a home under a new deal with digital lender, Better.com. They will be able to use stock as collateral for a down payment without selling. Before, they had to sell it. Now they don't. So here we go again with creative financing. They're going to do whatever they can to keep the housing market alive. So people are going to be allowed to put up stocks as collateral. We saw this take place before. What if stocks crash? What happens? Again, we've seen this movie before. It's very dangerous, and it's another sign that we are really ending this 15-year run that we've had since 2008 with 0% interest rates for about a decade. We've had the Fed buying mortgage-backed securities. We've had trillions of dollars injected into this market, or into the economy, into the housing market, into the stock market. And we've created massive bubbles now. So this is now telling us we are coming to the end of all this. This is all coming to an end. And you better buckle up, because we're going to see some serious damage here. 10-year Treasury yield hits highest level since November. Earlier today, the 10-year bond yield touched 3.983%, highest level since November 10th. 30-year fixed mortgage, again, 7.0%. 7.02%. As I make this video, they've got the 10-year down to 3.92. Interesting how we go from 3.98 to 3.92 in just a matter of hours. Here's another one from Fox Business. Consumer confidence slips again, falls unexpectedly for a second straight month in February. Households earning less than $35,000. And that's a lot of people, ladies and gentlemen, who earn less than $35,000. They're feeling serious pain. Remember, 52% of workers in this country make $32,000 or less. And every time they go to the grocery store, things aren't going up a few cents, a nickel or a dime. They're going up by dollars. I went to get some iced coffee at Winco. And I normally would pay $3.92 for a carton of this iced coffee. It was $4.92. Went up a whole dollar in a week. In 1 week, it went up $1. So things aren't going up a few cents. They're going up $1 here, $1 there. You know, it's incredible. And people just cannot keep up with this. Fewer consumers, it says here, are going to be purchasing homes and autos. And also, it's going to be a big problem here for an area that I'm in right here, which depends on tourism, which depends on people taking vacations. Vacation intentions also declined in February. I can tell you right now, some people may disagree, but there's a lot less people out here than there used to be. People are coming out here, they're spending less time as they used to. And it's very, very noticeable. There's people here, there's no doubt about it, but it is not like the heydays. It is not busy like it was a couple years ago. It's quite noticeable. But areas like this that depend on tourism, that depend on people taking their vacations here, the golf courses that depend on you coming out here and spending a week or two or a couple months here in the winter to play golf, they're hurting. They're hurting bad. The resorts, they're hurting. And they're going to be hurting a lot more as we arrive to summer, because we know oil prices are going to continue to go up. It's going to cost more to get on an airplane, more to rent a car. And all of these hotels are charging more and more for a room. So it's going to get much more expensive for the average person to take a vacation, to travel. So the news is not good. But I think what we're going to see in the auto market, in the housing market, is going to be epic. And we are now in probably maybe the second inning of all this. Wait till we get into the fifth and sixth inning. And it's going to be very interesting to see how this all ends and how bad it's really going to get. But again, we have less qualified buyers that can buy a car now, less qualified buyers who can buy a home now. We always say, oh, the inventory. We don't have a lot of inventory. The inventory is going to continue to rise while the inventory of qualified buyers is going to continue to shrink. I truly do believe we're going to see mortgage rates, could be wrong here, but I think we're going to see mortgage rates on the 30 definitely exceed 10%, my humble opinion. Right now, people are already paying over 8%. So what do you think that's going to do to housing? So if you're in the market like I am to buy a home, exercise patience, ladies and gentlemen. I know it's hard to do, but I think if you can wait 6 to 12 months, and maybe it's 3 months, maybe it's 4 months, maybe it's 2 months. I'm seeing price reductions every day in states that I'm looking at, every day, handfuls of reductions. So it's beginning. Question is now, how far does it go? What kind of sales are we going to see? How bad does it get? Stay tuned. Look forward to speaking with all of you very, very soon. This thing's going to get crazy. It's going to get real crazy.